Hey, Bulls and Bears, it is Saturday, November 13th, 2021. Thank you for being here. My name is JJ. I'm back with another dose of economic reality. We continue to see disturbing things unfold here with this economic situation. And a lot of people, especially people on fixed incomes, are really going to get hurt here. If you're making money in the markets right now, I really hope you're making enough to keep up with the rising costs here, but we got a lot of news to get into today. Let's get started right here. This is out of NPR. The inflation surge is making people hopping mad. So yes, people are mad, especially people on fixed incomes, but I think to you and I and the people that have been here on this channel, this is no surprise. We knew this was going to happen, and it's going to continue to get worse, in my opinion, as far as everything we can see. And we're going to talk about a lot of news that continues to give us the hints that things are going to continue to get worse here as we go forward. But this has been decades in the making. We've had outsourcing. We've had the money printers, the money machine driving up the cost of living via lending, via propping up the banking system, allowing banks to lend out money that they actually do not have in digital form. And that creates rising prices and creates bubbles. And the problem with bubbles is if they keep the same thing going on in the background, bubbles will just continue to get bigger. It doesn't have to end, but it's going to take ever increasing amounts of debt, ever increasing amount of lending and bank support, and basically funny money being thrown into the system, into the economy to keep this whole economic bubble, economic illusion alive. And that's where some people get into some trouble. They think just because there's a bubble, because prices are disconnected from incomes, people think, okay, it's about time for the prices to come down. It doesn't have to be like that, and I want people to really understand this. Just because something's overpriced or detached from wages or detached from incomes doesn't mean that it can't go higher. They have an unlimited amount of money. They can, at the click of a mouse, inject trillions of dollars wherever needed to keep this whole scheme, this whole Ponzi scheme, operational. Click of a mouse, trillions of dollars given to the banks. The banks can continue to give money out for mortgages, even though home prices are too high for incomes. People are now having to once again get by with debt, more spending, more credit cards, people borrowing against their homes. That's starting to increase again. All this is going to continue to get worse. Please let me know what you think down in the comments. Should people be mad about surging prices? Or was this all the writing's been on the wall for years? If you've been on this channel, you've known this, and you've been expecting this, and you've been preparing for this. And now we continue to prepare for things to continue to get much worse. But yes, if you're on a fixed income, you're going to be very, very unhappy with this. You're going to try to probably blame someone sitting in your office or the local politician, or maybe someone that's in the big office. You're going to try to blame that person. But this has been happening for decades, And the high cost of living is going to continue to have companies looking elsewhere to open shop, so to speak. And I don't think the job situation is going to get much better. And add on top of that everything that's happening now with the health crisis and all these people quitting their jobs, people taking early retirement. A lot of things, are combining at once or stacking together. It's almost the perfect storm. And that's another reason why we say things are going to continue to get worse. But let's take a look at this next article. People quitting their jobs. Wall Street Journal had a nice write-up on this. Record quitting fuels tight job market. There were 11 million job openings in early November. 11 million. All right, now this article goes on to say that's well above the number of unemployed. That's not true. I mean, if you look at the real unemployment, which is the labor force participation rate, just gives us a raw number. We know that it's more than 100 million. But a lot of people are long-term out of the labor force. A lot of people took early retirement, so you have to factor that in there as well. But it's definitely well more than 11 million people that are unemployed. Why can't they just tell us the real numbers? I think they want to keep people complacent. They don't want to scare people. They want people to think that the money machine, has everything fixed, and that they'll be able to fix everything just by printing more money. Well, look where the money printing has gotten us so far. Here we are. Most people are in some sort of debt. 75% of people are in debt. And that goes right along with the other statistic that most people are living paycheck to paycheck. So where does it end? Could we see a sudden collapse in this? It could be. We could wake up one day and everything will change. The banks are going to be allowed to fail. The banks are no longer going to be allowed to loan out endless amounts of money. And it's sad to say this, but this country is full of people, for the most part, that just think that more money printing is going to fix this. Look what all the money printing has gotten us into. Look where we're at. Is more money printing going to fix this? Why do so many people think that we just need more stimulus packages, more infrastructure bills, more stimulus checks, UBI, more payouts, increase the minimum wage? People think that passing these new laws for higher wages are going to fix the problem. It's not going to fix the problem. It's not going to fix the problem. All the money being printed is just going to make things worse. It's going to make things a lot worse. All right, somebody reminded me of this the other day down in the comments. The definition of insanity is doing the same thing over and over and expecting different results. That's exactly what we're doing. We're thinking that printing more money, bigger infrastructure, bigger spending bills, bigger deficits, more debt, we're thinking that's going to help. No, it's just going to continue to make things worse. Let's get into the next article here. We told you crime was going to go up. Well, we're seeing massive amounts of theft out of the cargo ships. As the container ships just sit there, more people are going to be breaking into them. And according to this article, about $5 million worth of goods were stolen just in the third quarter, just at California ports. All right, $5 million worth of cargo thefts, people breaking into cargo containers just in the third quarter, just at the California ports. What is it going to be nationally when you look at all the other ports? And how much worse is it going to get? Obviously, people are pretty desperate if they're breaking into cargo ship containers. And where's the security? Where's the security guards when these people are breaking into these containers? I'm sure it has to take some time and effort to get into one of these steel containers. Excuse me. Maybe the security guards all quit. Maybe that's part of the supply chain, part of the labor shortage. Nobody wants to work. Why are so many people quitting their jobs? Please let me know down in the comments. Right, well, there's a lot of different factors. We have the health crisis. We have the hoops that people have to jump through. But also we have the high cost of living. Take a look at this next article. Business Insider. High rents could be making the labor shortage worse, the Philadelphia Fed says. Many workers can't afford to live where the jobs are. So that's the thing. You have most of the jobs are located in metropolitan areas. Prices are going to be higher in those areas because more people are trying to move to the city. We're long away from the time where you can just live on a homestead and grow your own food and just get by just on your own plot of land. You used to be able to do that many, many years ago. But when they began destroying our currency right around 1913, that's when things really started to change. More people had to move to cities. We saw the Great Depression. A couple decades after that whole system was implemented. We saw them going after people to try to make the working people pay for all the spending. And that's the thing. It's going to continue. So all the spending, guess what's going to happen? They're going to try to come after the working person. They're going to try to take a bigger chunk of your paycheck, telling you and I that we're the ones that have to pay for it, when in the background they have this money machine that prints unlimited amounts of money out of thin air. And when we talk about the working class having to pay for this, well, that's if you're lucky enough to still have a job. Companies are going to start looking to replace people, and they are looking to replace people with robots. Let's take a look at this next article. All right, CNN had a nice write-up on this. America's hiring a record number of robots, and they have a little spotlight here of this Flippy, the robot. And it doesn't just stop there. You know, you're going to see a lot more jobs replaced by robotics. They're trying to get automated drivers, automated deliveries. We're seeing more and more voice prompts. When you make a phone call, you have to go through a bunch of different menu options to try to get to the right department. If you ever do get a human, you're lucky. That's a good thing in some cases. From this article, companies in North America added a record amount of robots in the first 9 months of this year as they rushed to speed up assembly lines and struggled to add human workers. All right, so what if all of this is a plot to say humans are no longer needed, more introduction to more robotics, bringing more robotics in. Factories and other industrial users ordered 29,000 robots, a 37% increase during the same time last year. So we're seeing a big uptick in companies looking to go robotics, get rid of the humans. The labor force. being obliterated in more ways than one, in several ways. And this doesn't look good, folks. So I continue to stress everyone to use caution, to be careful of your spending. On one hand, you don't want to go ahead and just blow all your money. On the other hand, prices are rising, so maybe things that you need to buy that you know you're going to have to buy, like new tires, depending on how bad this gets, a new car. That's the scary part. We don't know how long they're going to keep this thing going here, where they just keep the bubbles being inflated. So on one hand, you want to tell people not to buy because prices are high, but on the other hand, next year prices could be even higher with the way they have the ability to keep these bubbles inflated. So it's a hard time for any of us here. People like myself that all day, not all day, but a big part of the day we spend our time researching, listening to interviews, looking at charts. I spend a big amount of time researching these videos for you guys, and even I don't know. Even investors that are legends, been in the game for decades, 40, 50, 60 years, people like Jim Rogers, they don't know. Why? Because you cannot calculate a manipulated market, right? Prices look too high, yes. They could go even higher, though. That's just the way it is. Nobody knows. All we have to do is try to prepare for the worst, and I hate to sound like a doom and gloomer or depressed guy, but you just have to prepare for the worst. Yes, I'm hoping for the best. I'm hoping for this whole system to collapse and let the economy collapse. Then maybe we can pick up the pieces and figure out something better to rebuild this economy into something that's sustainable, not just endless amounts of money. You know what I'm saying? I think most of you understand. Thanks for watching the support. What do you think about the record number of people quitting their jobs? The rising prices. We also see coffee prices now, 7-year high. 7-year high, all those people buying their $4 or $5 Starbucks coffee, are they going to continue to pay higher prices? What if it's $6? What if it's $7? Are they going to continue to pay the higher prices no matter what? Is there a breaking point? Is there a limit to the bubble, how high prices can go? Or can institutions and hedge funds just keep coming in, buying homes with unlimited amounts of liquidity, unlimited amounts of cash, and home prices nowhere to go but the moon? Please let me know, how are you preparing? Like to see you down in the comments. Thanks everybody for being here. Stay well, stay safe, keep stacking. Bye for now. Peace.